This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. So this is the podcast we've all been waiting for, not just this year in 2025, but for as long as I've been doing this podcast. We've covered the banks many times on this podcast because they've been cheap for years. But every time we thought, hey, maybe it looks like this is the time to buy the banks, then we got the banking crisis. Then they've still remained out of favor, and it was never the right time really to buy the banks. They've come off of their pandemic lows, but a lot of them have not been able to have a true breakout. They've been in a narrow trading range for basically about 5 years. And many of us have been waiting as value investors to get back into the banks, or for the banks we're already in to finally bust out. But it looks like now is the time. I can't believe I'm even saying this. Maybe it'll be a false rally again, but I'm feeling pretty good about it because we're starting to have more general investors talking about the banks. They're not as scoffed at, they're not as hated as they were a number of years ago. Remember, it's been about 17 years since Lehman Brothers went under, Bear Stearns went under. The banks had all of their mortgage difficulties. We no longer have like Wachovia. That has taken a long time to get over, basically. But those who managed to survive that and have survived the pandemic as well are still hanging out, and they have very good balance sheets now. So what are the banks you should be in if you're a value investor and you want to get into some cheap banks? The reason everybody's talking about the banks now is because a couple of them don't appear to be that cheap anymore. And specifically, JP Morgan Chase, ticker JPM. It has been busting out to new all-time highs in the last year or so. It is considered to be the premier of the big banks. And these are like there's only 4 of them now, the 2 big to fail banks that the Federal Reserve just cannot allow to go under. They can't allow it to, have a Silicon Valley Bank incident. They will go in and rescue them if something like that were to happen. Thankfully, their balance sheets are looking good right now, so we don't really have that issue. But JP Morgan, the best in class out of the big 4. Big 4 being JP Morgan, Bank of America, Wells Fargo is still in there, and Citigroup now are the 2 big to fail. Each one is kind of different, has a little bit different business models, but JP Morgan's still on top there. And how good has it been for JP Morgan? If you're a shareholder there, over the last 5 years, shares are actually up 194%. And if you remember, the S&P 500 had very good 5-year stack, and it's up 96% during that time period. So it's easily beating the S&P 500, and it's been one of the top performers. And how do I know that? Because I took a look at some of the Mag 7 stocks over the last 5 years. Everybody just assumes the Mag 7s have been crushing it, and they have had a very good performance over the last 5 years for the most part. But Alphabet, for instance, up 130%, again, over just 5 years. Apple up 117%. But Amazon, the only laggard there, we have 39%, but I also was looking at it recently, said it was 52, somewhere in there. It's about half of the amount of the S&P 500. So, but that's over 5 years. You're still getting about, in this case, about 8%, 8 or 9%, but I did see a chart that showed 50% For Amazon, it was on Yahoo Finance. So I'm not sure who's right there, Yahoo or our data here at Zacks. 39% is off Zacks data, but either way, that's not terrible for the 5-year stack either. But think about what JP Morgan is doing, almost 200% on the 5-year stack. That is outstanding outperformance. So why is everybody down on the banks? Because it is mostly just JP Morgan that's doing that well. I took a look at Bank of America. It's been solid too, up 95. But again, that's almost 20% a year. And I don't believe it includes any dividends here. So you are getting dividends now with these, and you're not with like Amazon. But yeah, these banks, the big banks, haven't been as laggards as you might think. So what is going on with those now? They're in the news because the bank analysts on these big banks have pulled their stock recommendations. They've lowered them a lot from buys to neutrals, especially in JP Morgan, because they're now too expensive. They've gotten a little ahead of themselves, especially JP Morgan, and I'm going to go into that in a moment. But remember, with all the banks, you can't really look at PEs. They all have fairly low PEs, mostly under 15 times. So if you were to look at that, you'd be like, wow, these are all like really cheap value stocks. I'm looking at JP Morgan right now. Its forward PE is at 15.2. So just a little over 15, but this is one of the more expensive banks now. But the PE doesn't really tell you the full story. With banks, you should look at the price to book ratio. And the bank analysts have always said, and I've always mentioned it on this podcast, you buy when a price to book is at 1. That is considered to be cheap, or less than 1 is like dirt cheap. And then you sell at 2. So what is JP Morgan's price to book ratio right now? I don't think you're going to be surprised. 2.37. So it is a pricey bank stock right here. And if you're buying into the strategy of the bank analysts, then you would be selling JP Morgan here, not buying it. So it is stretched. I don't recommend JP Morgan, and I'm not recommending it in this podcast because the smaller regional banks have underperformed. They just have not kept up with the big banks. They have still been out of favor. People are willing to get into JP Morgan because it's the best in breed, and these are the too big to fail banks, but they have not been willing to get into the smaller regional banks because they saw what happened with Silicon Valley Bank and the one in New York, both who went under in the 2023 bank crisis. So they're not willing to risk it. But as I mentioned, the balance sheets are good on a lot of these regional banks now. Now, how do you know which regional bank to buy? Well, that's the bigger question. There are quite a few of the kind of mid-cap regional banks that are out there. There's several that are large cap regional banks, and those would be like PNC Financial. PNC has a pretty big market cap, but it's not, it doesn't have some of the like IPO investment banking side like a JP Morgan. So it doesn't get lumped into the huge mega banks. But PNC market cap of 78 billion. That's big. It's not quite back to its 5-year highs here. Like I said, these ones have been trailing the big banks. Key Corp is another one, ticker KEY on that one. PNC is just PNC. They only have a $20 billion market cap. I thought it was bigger, but that's still pretty big for a regional bank. They're nowhere near their highs. Their highs were hit in early 2022, and they're not even close right now. But shares are moving in the right direction, which is higher, even on Key Corp. Those are at least two of the big ones. Another one would be Comerica, ticker CMA. They're in Texas and Michigan, but they have a market cap of 8.3 billion. So you can see we're starting to get a lot smaller here. Comerica chart is very similar to KeyCorp. They peaked right at the beginning of 2022, and then they are not anywhere close. So they peaked right around $100 a share, and they're trading at $62.87. So we've got a ways to go there, but that's what makes these stocks cheap, right? So just taking a look at PNC's price to book, it is a little bit more stretched than it used to be. So PNC at 1.39. So buy at 1, sell at 2. So that's still on the one side. KeyCorp 1.23. Comerica 1.25. So they're still in the early innings on their valuations, because I do expect once we finally do get a run in the banks, like a true momentum play, that we will see a lot of these price to books closer to 2. But these aren't the stocks I want to focus on here on this podcast either. Although I like most of the banks and I like most of these regional banks, but I want to focus on 3 that are even smaller than those. And still regionals, though, not communities. So what's the difference between regional and community? Really, it's just size. The regionals are, as it says, they're in a region. So they don't just have 10 branches in one state or maybe 2 states. They have, 50 to 100 branches in multiple states. And they're actively out there expanding by buying up other regionals or even community banks in other areas to add to their size. So that's a big thing that's been going on. Lots of consolidation because, again, the balance sheets are good. So they're going to go up and buy the business, buy those bank deposits elsewhere. So the ones I want to talk about are all ones, at least 2 of them we've talked about on the podcast in the past, but I do want to revisit them because, again, they've been hated all this time and they still haven't broken out. And then the third one is one I discovered for the insider trader portfolio. Insiders were all buying it. I was not familiar with it, much smaller regional bank. So we'll discuss that at the end. But let's start with one that I own right now in the value investor portfolio. We've owned it off and on. We had to get out of it during the banking crisis, and now we're back in it. And it is WSBanco, ticker W, S as in Sam, B, C, WSBC. I also own it in my own personal portfolio. It's one of my favorite banks. It's headquartered in Wheeling, West Virginia. So not necessarily an area you might think to go look for a big regional bank, but they basically dominate that West Virginia market, but also in nearby states. And they've been expanding in them. Recently, they bought Premier Financial, and now they have nearly $30 billion in assets under management. Now they have the complete assembly of services, including loans, but they have a broker dealer. So if you want to have your investments with WSBanco, you can do that. They're about 150 years old. I do have a soft spot for these really old regional banks. They know their customers and they have survived a lot. Let's just say market cap is only 3.2 billion with WSBanco. So they are small if you even just take into account what these others have been, the other size of the others. And they do pay a dividend. That's also what I like about the regionals right now. Because they've been improving their business and the market hasn't caught up and the stocks are cheap, they continue to pay these dividends and increase the dividends. And so the yields are very nice on the bank stocks right now. For any of you going to look for some yields, you can find them in the banks. So WSBanco, it's 4.46 is the yield right now. So about 4.5% on the yield. That's pretty nice. Now, these shares do mimic what I was just saying about some of the other regional banks. They are off the 2023 lows. That was the banking crisis. They are off that panic, but they're not back to the highs, which were 2022. But they're moving in the right direction. So these are, it is cheap. Let me just look. So price to book on WesBanco is just 0.87. Remember, you buy at 1, you sell at 2. It's not even at 1 yet. So I'm liking that. It has a forward PE of 10.6, but we don't care so much about the PE. Earnings expected to be up 33.3% this year and another 25.3% next year. Some of that is because of this new bank they just bought. It's going to be accretive to earnings, but also these banks are just turning it around right here, and they really are growing those earnings again. So WesBanco is currently a number 4. And I'm sure you're like, Tracey, why are you talking about a sell stock on the podcast? So it's reporting at the end of this month, at the end of July 2025, July 29th. And sometimes right ahead of the earnings, the weeks right ahead, there'll be old estimates that fall off, especially with a company where not that many analysts are covering. So I'm looking right now, WesBanco. So we may have we might get old estimates falling off. We also have one estimate that's just down in the last 30 days. And nobody's raised. So they're looking for 312. That's down from 313. So I'm not too concerned about a penny there. And they have beaten 3 quarters in a row now on the earnings side. So WesBanco, I'm just liking everything that's going on there. I'm liking their expansion. And with the regional banks, you should at least be familiar with the region of the country that they're in. And hopefully you're picking a regional bank in a region that is, growing economically and has a lot going for it, because that's when even the banks will do better. It gives them more options to lend and all of that. Now, WesBanco in Wheeling, West Virginia, means that they're not in the South. They are in like Ohio, Pennsylvania. I think they're in Indiana now. But these areas, housing is still doing fairly well. And so their mortgage business should be doing pretty good. And so they're not going to have to worry about excess inventory, home inventory, as much as if you were buying a Southern bank. So that's something to keep in mind with any of these banks. So that's WesBanco. WSBC is the ticker. I'm a big fan and I own it, and I'll be tuning into this next earnings report. And it's cheap. Okay, the second one is one that I used to own in the Value Investor. We've not gone back into it. And I also owned it in my own portfolio, but I've not gone back into it either. But I still love the bank. And it's Bank OZK, used to be called Bank of the Ozarks, for those of you who've been around a long time, but they did change their name to get rid of the Ozarks part a while ago. But they are headquartered in Little Rock. They're in 9 states. They have offices in 9 states, but they are known as the real estate bank. And so that area has been challenged. It's not all like mortgages on homes, but they give out development loans to people building apartments, people building condos, and that can get iffy. They also do some commercial lending as well. So if you're building a big laboratory in San Diego, they might give out the development loan on that. Now, what does that mean, the development loan versus like the regular mortgage on it? So they're just giving the money so that the developer can go build the building. And then the developer will refinance that loan, pay it back, and then get a standard loan once the building is built. So sometimes they can't pay the loan off yet. So they kind of just keep it on the books a little longer and then switch it over. But most of these loans get paid back, and then Bank OZK has to continue to lend out. Now, most of their portfolio has been real estate, and that has been somewhat risky over the years, right? So they have been expanding their portfolio into other areas like marine and other lending places. So that's good. But their main expertise is still on lending, and they lend well out of the South. They're one of the bigger lenders on apartments in Chicago, for instance. Miami is one of their big lending areas. But again, with that comes some risk, right? As we've seen, possibility of overbuilding. Some of these buildings, maybe the developer doesn't even finish them. But Bank OZK has excellent underwriting standards. And so I've always loved the management. Market cap, 5.9 billion. So they're a little bit bigger than WesBanco, but not as big as like Comerica. They do pay a dividend. It used to be a low yield for many years, but since the stock has been challenged and hasn't really gone anywhere in the last 4 years, for sure. If you looked at the chart, it's just up, down between $35 and $50. Right now, it's trading just above $50. But it's done this a couple of times, and I've always said, oh, it's about to break out finally after 4 years, but then it doesn't, it just breaks down. So we'll see if this time it can get the breakout. Now, how cheap is Bank OZK? Its price to book is low at 1.08, so almost at the 1 there. So it's still on the cheap side. It does pay that dividend. Maybe I didn't say the yield, 3.3% on the yield. That's pretty good for Bank OZK. And earnings expected to actually decline in 2025. It's hard to lend right now with the mortgage rates as high as they are. A lot of developers don't want to build right now. So they're kind of holding back. That's probably impacting the earnings a bit here. But 2026, they see a rebound of 8.8%. But again, you're getting it very cheap. Earnings are on July 17th. So we'll wait and see what that says. It is a number 3, which is the hold. And I'm just going to go look and see if anybody's doing anything over there. We have more analysts on Bank OZK than we did on WesBanco. We have 6 estimates for earnings. One is actually higher in the last week, pushing up this year's earnings to 613 from 610. So somebody's getting a little bit more bullish ahead of this earnings report. They have beat 4 quarters in a row now. So we'll see what happens this quarter. But Bank OZK, the real estate bank, if you're betting that that's going to turn around by 2026, then this is the one for you. And then I want to wrap it up with the one I found in the Insider Trader, because a bunch of the insiders were buying there. And even though it's in my home state of Illinois, I was not aware of it. And that's the other thing with the regional banks. We all know the ones that are in our towns. So take a look. Maybe it's public. Maybe it has good balance sheets. Go see what's happening with your local bank. Some of the community banks, those are harder. Some of them trade over the counter, but I really don't recommend those because there's just no liquidity there. But these bigger regional banks, check them out. We all know some of these regional banks in our areas. Okay, so this one is or was headquartered in Champaign, Illinois, home of the University of Illinois. And it is called First BUSE. Am I saying it right? Tell me, Champaign people. But they recently acquired Cross First out of Kansas. They're in Laywood, Kansas. And corporation will be headquartered in Leawood, outside of Kansas City. But BUSE Bank, which is in Champaign, will still keep its banking headquarters in Champaign. But I noticed with the press releases now, it is listing Leawood, Kansas as the headquarters, which it is technically. So First BUSE Corporation owns First BUSE Bank, which is just bought Cross First. Are you following? Are you getting it? They now have 77 locations across 10 states, and they have assets under management of $20 billion. So this is a much smaller bank, just 2.2 billion in market cap, but I like the expansion, and they're in some key areas again. Yes, Illinois, but also Kansas and in St. Louis region, as well as I think they have one in Florida and Arizona. They have branches in the areas where people in Illinois move to. For sure, in retirement. They go down and they buy their winter type home. So I like all these areas, and I like what's happening with First BUSE, and that the insiders all see it as a cheap bank stock. So they do pay a nice dividend. It's yielding 4.1%. So that's real juicy. And they also are doing a increase to their share buyback plans. So they already had one authorized, but in May, they announced they were increasing it by another 2 million shares. So they have 2.98 million shares still outstanding under their total authorization. So I'm also liking that they're so shareholder friendly here. And how cheap is it for First? So this one is dirt cheap. That's why I like it so much as value investor. Price to book is just 0.6. 0.6. So you're not getting much cheaper than that. And the shares have been in this kind of narrow range for 4 years, much like Banco ZK, but up, down. If you can time it correctly when the shares are on the downside a bit, then there is a nice upside possibility. And we did get the sell-off in Liberation Day. It did spike down. And it's only come back about halfway back from its 2024 highs. And then First BUSE also hit the highs, like many of the others I've talked about, in early 2022. We're not really close to that, but I have seen some analyst price targets close to that, which is almost $30. And I've seen some analyst price targets at 30. And right now it's trading at $24, give or take a few cents there. So what are earnings expected to do? Up 20.2% in 2025, another 9.6 in 2026. Some of that is because of the acquisition, of course, similar with WesBanco, but these banks are using acquisitions to grow, and that's not a bad thing because they are getting these banks at fairly cheap valuations as well. So over the 5-year stack, WesBanco has done 70.4%. It's up 70.4. BUSE's up 91 in that time period, but this includes the pandemic, the 6 months of the pandemic. That end of 2020 when the banks were really beaten down and then did rally in there. So in 6 months, it's not going to look quite this good on the 5-year stack. And Banco ZK, same story, because it's up 128.7% in the 5-year stack, but you wouldn't know it looking at the 4-year. So over the last year, however, WesBanco up 19.7%. Banco ZK has come off those recent lows, up 25, and then First BUSE only up 1%. So it still hasn't come back from its Liberation Day sell-off completely yet. So keep an eye on that. So where do we stand? Let me just look real quick at First BUSE, see if anyone is doing anything with that. It is also a number 4 sell, but it is reporting around July 22nd. We don't have it confirmed yet, but sometime probably that week it will be reporting. And we do have some estimates that have been cut. So in the last 30 days, 1 is down, 3 are down in the last 60. But we're looking for 250, and it was at 254 just 30 days ago. So 4-cent difference there. Someone just kind of getting in line, but they have beaten 4 quarters in a row. So they have a pretty good track record of meeting or beating in there. But First BUSE is the smallest out of all of these. And so you really just have to drill down, listen to the conference calls, and get it as cheap as you can, which it is very cheap right now. So just 0.6, as I said. Did I talk about? Yes, I talked about all of that. The cheapest of the big banks, if you are still looking at those, is Citibank, or Citigroup as it's called. It is always been the cheapest. It has big international exposure. It is. Wow. I haven't looked at this chart in a while. So I'm seeing it's breaking out to 5-year highs now. So that's pretty impressive. 159 billion market cap, 2.6% on the dividend, 23% earnings growth for this year, 27% for next year, and a price to book of just 0.8. So maybe I should be considering Citigroup here, but you do get a little bit different exposure with all of the international business that it does. And it has been consolidating and getting out of some of its international business as well over the last couple of years, but earnings looking pretty good over the next couple of years, even into 2027, that's showing up here. So that's Citigroup, just ticker C. That's looking intriguing. It's number 3, and they are reporting on July 15th. So it's coming up next week here in 2025. So tune into that one. It's the cheapest of the big banks, but I'm still a regional investor. There's a lot of value there. You can also buy the KRE or the, KRE, which is the ETF for the regional banking ETF. If you just want to own a bunch of them, if you don't want to figure them all out, that's the way to go. But otherwise, I like a lot of these banks, and I'm going to be watching a lot of these earnings reports. We have already seen a lot of insiders buying at various regional banks as well. First BUSE is the only one I currently own, but there have been others. And so I'm going to be keeping my eye on that. Once these earnings reports come in and the window opens for the insiders to buy or sell again, I'm going to see who is buying these regional banks at these cheap prices. So let me recap the stocks we talked about. So it was the big cap, JP Morgan, ticker JPM, then Citigroup, ticker C. We mentioned PNC, which is just PNC, KeyCorp, KEY, Comerica, CMA. But the 3 we really focused on, the smaller regional banks, Bank OZK, which is just OZK, First BUSE, BUSE, and West Banco, which I own myself, and it's in the Value Investor, WSBC is that one. And as always, I aim to bring you as many value stocks as I can, and apparently banks are where it's at. Will this be true? Will this finally be the breakout we've been waiting for? Well, I'll be back with some more podcast episodes to give you an update on it all. So be sure to subscribe. Get us on our YouTube channel. We have our own podcast YouTube channel, just Zacks Podcast. I know many of you subscribe over there. You can get us on the podcast link on Zacks.com. We're on Apple, we're on Spotify, we're on Amazon Music, just about anywhere you can get podcasts. Find the Value Investor and subscribe there, but be sure to get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.